Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving an outlook of the market for the week of the 14th of March until the 18th. Now as always, before we get started, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. As always, we'll be kicking things off with stocks, and with stocks, one that's worth keeping an eye on is going to be Chevron Corporation for next week. And if you remember on this week's look back video, we mentioned that JP Morgan has recently downgraded the stock to a sell. If we look at the stock price itself, we can see that over the course of just the 3 last weeks, it has risen by as much as 27.5%. So it's understandable why JP Morgan will consider its upside potential limited, as it specifically mentioned. If we compare Chevron Corporation to some of its peers, like BP as an example, we'll be able to see that it hasn't enjoyed as much strength as Chevron Corporation has enjoyed over the past 3 weeks. And we can also look at ExxonMobil as another example. We can see that even though it has risen quite strongly as well, it wasn't as solid as Chevron Corporation's rise, which we can see is still pretty much trading at the highs over the last couple of weeks. It has retraced a little bit. We can see the high of this candle was around about $175, and it's now only trading $5 off the highs. So again, worth keeping an eye on. We also had the downgrade, which obviously it came out from a pretty big player in the market, which is obviously JP Morgan. Another stock that recently had a price update was also Ferrari. Now Ferrari, it had a rating upgrade rather than a downgrade, which was Chevron's case. Ferrari was upgraded from a neutral to buy by the brokerage firm Redburn. Now this also came off the back from a statement released by Ferrari, which said that it does not see any impact on its supply chain as a consequence of Russia's invasion of Ukraine. Now a spokesman also added that Russia was a very small market for Ferrari as a whole. Now if we zoom out a little bit on the chart, we can see that it has enjoyed a pretty nice trending up movement. However, since the start of around about 2022, it started dropping, as was the case with the majority of the stocks in the tech sector as well. Obviously, Ferrari, being in the automaker industry, is relatively different, but overall, the markets were all affected by the big slump in the tech sector. You can see that it's been dropping, and it reached the lows from the back of basically January 2021. We are now forming what we call a hammer candlestick right down at these levels. So given also the price upgrade from neutral to a buy, we could see maybe if we can get a little bit of a bounce back with regards to prices. Now next up, we're going to be moving on to Forex, and we're going to be looking at the economic calendar in this case, which again, the economic calendar you can access straight from Tixee's website. All you need to do is to basically click on the home page. You can go on the education and research tab here, and you'll find the economic calendar as the third option. Now looking at this view, you can obviously adjust it according to your liking, but for the sake of this video, we're going to be looking at next week's events, and I'll set it to medium and high as well. Now we can see for next week, we're actually going to be having a flurry of events that could introduce further volatility in the markets. Things will kick off early on Monday with the Eurogroup meeting, and as we can see, it's going to be followed then by the Reserve Bank of Australia meeting minutes on the very next day in the early hours on Tuesday. Now again, just keep in mind that I'm using the UK's time zone as the indicator here. So all the times that you see on the left hand side are based off of the UK's time zone. Now on Tuesday, we're also going to be having employment. If I scroll down, we're going to be having employment data coming out of the UK, as well as the average earnings index as well. Now, something that you can use with this economic calendar, which I find very, very useful, is this little tooltip right here, which basically measures the volatility in pips in the 4 hours following the release of a specific event. So you can use it pretty much to gauge how much volatility you can expect after the release of a particular event. Of course, it's not set in stone that this exact amount is what's going to follow, but it just gives you like a rough idea, for example, of what's to follow after that particular event. Now, the highlights of the week looks like it's set out to be on Wednesday. So if I scroll, let me just find Wednesday. So on Wednesday, as we'll see right here, towards the, I would say, midday towards afternoon, or like late afternoon, we're going to be having the interest rate decision being released from the Fed. Obviously, a huge event, as we have the US dollar mainly being affected, and as all of the major currency pairs are paired to the US dollar, we were likely going to be seeing a lot of volatility during this time here. Obviously, you can also use the previous figure that was released, which was 0.25%. So we can see now that the interest rate is expected to rise by 25 basis points to 0.5. Again, this is the forecast. So depending on the release of the actual figure, we'll be able to see more or less how the markets are going to react to that. And again, just like we said with the pound events earlier on, you can see pretty much here as well the volatility that is measured, which for here after the interest rate is going to be more or less 76.5 pips, which is a pretty, I'd say, pretty hefty range when it comes to the euro dollar. So yeah, definitely keep an eye out on Wednesday with regards to the interest rate. We're also going to have the typical oil inventory report as well. So I would say with the inflation data coming out of Canada as well, that Wednesday is going to be like the highlight of this week. Now, on Thursday morning, we're also going to be having a speech by the ECB's president, Christine Lagarde, as we can see right here. We're going to have some inflation data, again, coming out of the Eurozone. And again, that's going to be followed soon by yet another strong event, which is going to be the interest rate decision coming out of the UK. Again, it's always good to just have a look at the last figure and the forecast figure right here, which you can see again. We're expecting an increase of 25 basis points on the interest rate with regards to the UK. So again, currencies that are going to be affected are obviously the ones that are paired with the pound. So you're looking at pound dollar, pound Canadian, pound Australian, and so on and so forth. And lastly, we're going to be looking at Friday, which we're going to be having yet another interest rate decision. This time it's going to be the one from the Bank of Japan. The figures are expected to stay the same, but nevertheless still worth keeping an eye on, because we kind of have some reports or statements after the release of the event, which could indicate or give us like an outlook with regards to the rate cycle that could follow for the rest of the year. So overall, I would say it's a pretty jam-packed week with regards to events, especially since we're going to be having interest rate decisions, which are some very significant events when it comes to the Forex markets. So definitely keep an eye on those. Next up, we're going to be looking at the commodities. So oil for next week, the usual suspect is going to be the oil inventory report, as we mentioned earlier, which is going to be released on Wednesday. However, we'll also be looking at any key updates with regards to the ongoing conflict between Russia and Ukraine, as more countries could follow suit after both the US and UK announced they will be banning Russian oil imports, with the UK saying that it's going to do that. It's going to phase them out by the end of the year of 2022. Looking at the price chart, we can see that it has finally seen a pretty decent retracement over the last couple of weeks, because we can see basically from the lows, which were round about like $70, all the way up to this level, which was 115. We didn't really get any significant retracements, which we did finally get last week. So additionally, we're also going to be looking to see if we have any further reports or updates by OPEC with regards to the current supply levels, which obviously will again impact prices, and we could see some either more upside or downside depending on what is being released from the reports. And next up, we're going to be looking at gold. Now, for gold, it's going to be more or less the same narrative, as the ongoing conflict seems to be the main driver of gold prices. Any further escalations could prop the yellow metal back to the highs around the $2,000 mark or even higher. But if we have any signs of de-escalations, we could see gold prices returning back to the trading range of around this area, which, if you remember, it did struggle to break out since we were trading in this range since the 6th of March 2021 all the way to basically the 5th of February. And we can see here we're rising up to the highs, which was leading up to the announcement of the invasion of Ukraine. And in then prices, we saw them breaking out higher, holding above that level. And then over the course of this week, we saw prices finally breaking above the $2,000 mark. They did retrace back down lower, but we can see they're still up there, just $15 off of the highs. So yeah, any further news with regards to the invasion, and we could see prices of gold again reaching up the highs of 2000. If not, we could expect to see it maybe coming back down into the higher end of this range right here. And then lastly, we're going to be looking at Bitcoin. With the cryptocurrency, we can see here it's still stuck between the range of 44,500 and 32,950. Of course, this is a pretty large range with respect to other assets, but when it comes to Bitcoin itself, you can see it's a pretty narrow range overall, with prices just trading in this range for the last couple of weeks, basically since the start of the year, as we can see right here. We did have some attempts to break above it. However, we also have the 21 EMA, which is also, it seems to be holding relatively strongly, as if I zoom in, we'll see that every time we're coming into the 21 EMA, we're just getting rejections, and yet another one right here. If I switch onto the line chart, just to get a clearer picture, this could be seen as an ABCD pattern that was completed. So we could see maybe one further push into the lows before we see a bounce back. But again, this depends as to what further news we'll have with regards to cryptocurrencies, as well as the conflict between Russia and Ukraine. We did have some positive news this week with regards to the overall adoption of Bitcoin and cryptocurrencies into mainstream finance. Earlier during the week, US President Biden signed an executive order to develop and use cryptocurrencies, which is obviously a major step, seeing as how the US is also one of the world's largest economies, who is looking into regulating the market. So you can see the prices did rise up a little bit during the week. They have dropped back down into these levels, but we're still trading in the green for this week at the very least. And yeah, there you have it. This is as far as the outlook for next week's markets. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.